Good morning, everyone, and welcome back to Craw. Let's jump right on in. So, as you know, this is day 5 of our earnings series where I'm providing insight on which companies are providing earnings this week. And I'm giving my prediction on whether the stock will go up or go down. Disclaimer, as you know, whenever somebody gives you advice, especially about investing in the stock market, you should always do your own due diligence. Never blindly follow anyone's advice, especially when it comes to your hard-earned money. All right, let's get into it. So yesterday we talked about a few companies that I had a strong feeling about today. We have Wix.com, Norwegian Cruise Lines, and Uber. So there has been a motif this week which leans towards entrepreneurship. So yesterday we had Fiverr, Etsy, Square, and then the day before on Tuesday we had Upwork. And so companies that are providing services to entrepreneurs, especially during this COVID time, have seen an increase in revenue. And so I felt like Wix, which is a company that provides websites, especially for those that are in entrepreneurship, they would have a pop. Let's see what happened today. Okay, so now this is surprising. So Wix actually lost money. Now the reason they lost money is because they were actually heavily investing in marketing. From what I've read in the earnings report, it does seem to be paying off. However, they did report a loss. Now their revenue actually did beat expectations by 3 million, so up to 236 million dollars last quarter. So that's definitely great. However, their guidance is good. So they're predicting that in the second half of the year they're going to have great earnings, and so this is the reason for the uptick here. So as you can see, I was correct. Well, actually, it wasn't correct. I was incorrect. So their revenue did increase, but their earnings decreased. They took a loss. So appropriately, the stock fell. However, they're actually right back where they started the previous day. So honestly, and all in all, it was kind of a push. All right. So moving on to Norwegian Cruise Lines. So this is pretty obvious. Norwegian Cruise Lines, 100% of their business is based on cruises. However, with COVID, people are not traveling. So honestly, that was a no-brainer for me. They definitely took a loss. Let's see what happened. Exactly. So Norwegian took a loss of almost $1 billion last quarter, $715 million to be exact. And so, as you can see, $2.78 loss per share. However, once again, guidance or forecast for the rest of the year and into next year. So, for some strange reason, during our conference call, people are still booking 2021 cruises, and they've seen great demand for their cruises next year. And so, even though they took a hit based on their poor earnings, the fact that people are still interested in the company and still interested in traveling with the company next year, stock price shows that gain. So, initially, I was correct, right? You know, they're going to lose money because their core business model essentially is disrupted completely. But as I said before, the stock market is forward looking. And so if you can predict great earnings in your future, the stock market rewards you, as you can see here, with a slight increase here in the stock price. So, all right. Last but not least, Uber. So this was also in the same vein with Norwegian, right? So Norwegian is focusing on basically people moving, right? Now they focus on the luxury, the vacation space, but Uber focuses on the normal person trying to get from point A to point B. But people moving has been severely decreased, right? So airlines, cruises, hotels, and now taxi services, or mobility as Uber calls it, has been all decreased. So anytime I see people moving as your basically your core business model, and I know what's going on with COVID, that's an easy no-brainer. You took a loss last quarter. However, I did say that Uber does have Uber Eats. And so even though their mobility business model took a hit, I'm pretty sure Uber Eats probably took a nice win because people have been social distancing, staying home longer. And I'm sure people have probably been crazy ordering food off Uber Eats. So let's see what happened today. All right. Correct. So Uber did take a loss. However, so as you can see here, their loss was $1.02 per share. But that makes sense because honestly, Uber has not turned a profit since their inception anyway. So completely understandable. Now they claim that they're going to be able to turn a profit next year. However, I find that very hard to believe if COVID doesn't go away. So we shall see. But on its face, you know, yeah, we'll have to see. I don't know if things will be back to normal by then, but it is what it is. All right, now on the flip side, they crushed it on the food delivery side, right? So they grew their business by 200% last quarter, which is wonderful. But their mobility business model, which is sharing of rides, that is actually more profitable for them. So even though it took a gain in the food business or the food delivery business, it couldn't make up for their normal main business. So, but yeah. So that concludes our first week. I hope you enjoy all these videos in this series. If you learned something, let me know. Send me a comment. I'll write one below. Thank you so much for watching. I sincerely appreciate it. If you found value in this video, subscribe to the YouTube channel. Share with your family and friends. I'll see you in the next video.